Indian CDMO space research. So this is like one of the researches area. Well, let's see that. So in his contract research development and manufacturing CRDMO, secular growth and regulatory tailwinds. Divi's Lab, Suben Pharma, Blue Jet Healthcare. I'm not aware this one. Syngene. Let's see this Blue Jet uh, Healthcare. No, I never heard of this company. Hmm. It's a smaller company, recently listed. This is doubled since it's listed. It's been growing quarterly. It looks interesting, eh? So, yeah, it is high margin, really high margin. So it's a pure CDMO space company. Reserves. So how much is trading at? 13,000 crore. Okay. Yeah, I want to follow this. Okay, I'll come back to this company. I'll study more on this. Recently listed. Okay, we'll go to the DRHP as well. Okay, so yeah, then CDMO space coverage of 11 companies. We prefer Indian, Korean CDMO with Divis Lab, Samsung Bio as the top picks. Divis Lab. I had Divis Lab in my portfolio. Let's see. Oh, it's a one and a half lakh crore company, is it? Okay. One for 3,000 to yeah, okay. Must be margin must be high. Yeah, this is margin has been high since the beginning. They get better valuation. Hmm. This is CDMO company. Have they diluted equity? No, they've never diluted equity. Organically, they've grown. They've diluted since 2015 to 2016. Okay, okay, let's go next. Regional CDMO coverage valued at over 50 billion, projected all of that. Let's see. Chinese CDMO once preferred for the speed and track record face challenges due to US Biosecure Act, leading to shift to projects to alternate suppliers. Okay. Indian CDMO sector is an inflection point driven by pharmaceutical outsourcing, pricing. As per consultant, Indian CDMO currently valued at 7 billion. It's set to deliver 14% by 2028. Furthermore, we believe that regulatory tailwinds, all of that. Okay. Within listed space, DB Slab, Suven Pharma. Let's see Suven Pharma. These are like pure CDMO because their margin is very high. It came on 20, it has been a 10x since then. The revenue is not even like 200 a, but the margin is high. That's why, or they are telling a better story. The narrative is better, I guess. Oh, the reserve has doubled, but the revenue is almost same. Okay, yeah, yeah. Margin is high, so it's getting added a lot. There is no equity dilution. Yeah. Promoter has been selling though. Promoter has been selling since 60% to 50%. Anyway, Astra is a product-led CDMO focusing on advanced technology such as antibody drug conjugates, ADCs, peptides, oligonucleotides. So, project faster top line growth of 25% of this product-led CDMOs versus maintain for Syngene. Syngene is how big is that? Syngene is a 28% here. Okay, and it has almost stayed from on the same price since 2020, 600 to 700. Let's see what has happened to the revenue in that. Revenue has gone from 2000 to 3500. Margin is stayed almost same, 31% to 29%. And the EPS has not grown. Depreciation is high. This is a non-cash expense, by the way, so should not matter. But yeah, on EPC it won't, so it won't be a cash flow transaction. So still pretty expensive, I would say. I mean, the whole pharma space is expensive, like 60 PE. Cells to is like almost 10x cells. Um, yeah, EV to EBITDA is like 44. But yeah, I'll will go in details into these companies later. So they are saying these product-led CDMOs will have more margin than EA. Expect a 1,000 rupees improvement in EBIT. Okay, executive summary. 2020 11% growth is full cost-effective manufacturing, rising outsourcing from China, largest player, but India, South Korea remain a dominant phase. It's the largest molecule service, while India companies have preferred choice for smaller molecule intermediates. China plus one. This is driving pharma companies to establish more diversified, resilient global supply network. Inflation Reduction Act and Biosecure Act, accelerating outsourcing diversification. US pharma become the preferred choice of small molecule development. This is one problem Indian pharma has. Like they are only on small. They are not been able to go on high margin businesses like a peptide or yeah. Cost competitiveness, strong regulatory expert active pharma. Indian CDMO companies have witnessed strong RFP growth in past year. Our picking order Divis Labs, Labs is Blue Jet Healthcare Syngene. Outperforming returns picking order of EA. Okay, let's tweet this. South Korea dominates large molecules. South Korea, like Samsung Biologics, global biologics market. The company blasts a bureaucracy capacity of plans to move more than double capacity of 1.3 liters by 2022. Companies will primarily benefit a mix shift away from China, large molecule, and technology is evident from quick ramp up of the largest plant yet. Plant 4 with a reactor capacity of 240 KL, hitting growing demand due to plant 4 ramp up. Company has accelerated timeline of plant 5. Exceeded in is launch antibody conjugates. Let's see what this is like. Monoclonal antibody and cytotoxic drug. Once preferred schedule supplies due to this speed track record, Chinese are finding as it takes 2 to 3 hours. However, one should start to see projects those they are longer. Yeah, inflection point due to secular growth in they were saying the same thing again and again. So FNS forecast in India 40%. Global CDMO industry, clinical development, discovery, preclinical, commercial. This is the last stage. Very few get out of the last final stage. Regulatory change, accelerator growth. US Biosecurity Act bill starts for now, but impact still shapes outsourcing strategy. Um, US-based companies account for most of the R&D pipeline. US NIC grants from 2015 to 2013. Small and biotech firms account for largest share of NCA approvals by US FDA. Reliance and Chinese CDMOs. We think the safety lag driven by need to diversify. Chinese CDMOs. By moving away from these companies ensure greater security, stability of the product processes. Focus CDMO space in global to increase from 5% from 3.6 or 7% is nothing. Market share will be driven by significant cost advantage. US generic demand 50-25% of all UK. Acha, India supplies supported by India supplies 47% of US generic demand. UK medicine. Hmm. Expected to gain market share. Indian citizens offers meaningful cost advantage. Proportion of cost like India is the cheapest, but India needs to do more on biologics and molecules. Have grown multifold. RFPs, number of clients at top global pharma companies. Number of clients, Shenzhen. CDMO, CRO, CDMO, CRDMO offer us. This is something to keep a note of. Oh my god, this is useless. Offer into end-to-end service across entire drug discovery. Cost-effective, customized solutions. Let's write on Substack. CRDMO space. CDMO, drug development, commercial manufacturing. They don't do R&D much. CRO is specific to R&D only. CDMO, CRDMO is like mix of both R&D and manufacturing. Tripos in the integrated CDMO period, their revenue skewed toward the side of spectrum, either research or on product. Everybody wants to be CRDMO, but either they get out as a they good they are good at one of it, not both. Has the highest exposure to research services, while DVs has the highest. GLP, yeah, antibody conjugate and GLP-1. Conversely, Syngene, Laurus Lab segmentation listed in CDMO space. Laurus Lab, Newland, Blue Jet. Expect 40% Blue Jet Healthcare. We expect solid top line growth. CAGR coverage company. Blue Jet also they have the highest expectation, and that's valued. This is not much discovered. I'll need to read more on this. I'll do a detailed video on this Blue Jet Healthcare. Solid profitability and improvement. Peptides, ADC. Uh, Meaningful improvement in EBITDA margin. Kakinada plant. Healthcare expanded manufacturing facility contrast median from acquired NJ Bio ADC space in Sapala. These product-based CDMOs are demonstrating solid returns pre-tax. Um, Suven Blue Jets engine. offer high growth, higher ROIC at reasonable valuation. Indian CDMOs are a higher return on investment capital. Drug discovery, development, clinical supply. Um, Rapidly at scale, time to market, cost advantage, global CRDMO space. With global CRDMO, forced to estimate the drug discovery industry stands at 13 billion 2023 is 10 billion. Clinical development supplies to grow 144 billion by 2028, 10% CGR. Growth in CDMO capacity continues to outpace large pharmaceutical contribute the majority share in CDMO space. India growth rate of global CDMO industry 2028 to 2023. There is no Korea here. Okay. Even here, like you will see China did 20%, but expected is uh, India small molecule biologics. Biologics not much. Global share industry by modality, small molecule and value. PV slab. Now they have gone into details. Let's see Blue Jet Healthcare. We'll continue in another video.